And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine a world where the currency in your wallet is no longer the kingpin of the global economy. Picture a scenario where BRICS nations, those emerging economic powerhouses, are clandestinely orchestrating a seismic shift that could topple the throne of the mighty dollar. What if I told you that, in this new world order, silver isn't just a precious metal, but the cornerstone of a revolutionary financial era, with its value potentially skyrocketing to a staggering $4,044. Yes, you heard it right. Today, we're embarking on an extraordinary journey, one that delves deep into the intricate web of economics, geopolitics, and market forces. A narrative that's not just about numbers and charts, but about the tectonic shifts that could redefine wealth, power, and prosperity on our planet. Stay with us as we unravel this audacious plot, piece by intriguing piece, revealing how BRICS could be planning the downfall of the dollar, and why silver might emerge as the unexpected champion in the currency arena.
Okay, but they're not the main drivers, in my opinion, nor do I expect them to be the main drivers. The continuing singer's main driver is central bank buy-in, and part of that is because of what is happening, which still most on Wall Street pay no heed to and are going to pay a terrible price because of it, to understand what the formation of the BRIC nations is leading to. It was an afterthought, then it was just 5. Okay, now it's 10, maybe be 20. And I hear people scoff and say, it's these countries and nobody cares about them and so forth and so on. How wrong that is. And yet, two of the biggest parties within that group, Russia and China in particular, have been huge buyers of gold. And they're not buying it for a trade. They're not buying it for speculation. They're buying it because someday, somehow, in some form, gold will be used as part of their medium on how they're going to do business with one another. It may just be something regional, just among themselves, or maybe someday it will compete with or replace the U.S. dollar. That isn't any day soon, but that's what we're working to. And as we work through this, they continue to be aggressive buyers. So I think central bank buying and related to BRICS is the number one bullish thing for gold. The second thing is, and I think it's interesting, and maybe you don't like seeing that, but I think it will be important to you, is that people are willing to go into Costco and Walmarts and buy gold. And to think about that, even though it's not large sums of money, and basically they're almost using it as a loss leader because they're not, trying to profit from it. They're really just trying to found a way to attract people into business. The very fact that Americans now are willing to buy physical, understand this, the culture in Asia, it's a way of life of owning gold. Americans have no understanding unless, they go back 60, 70 years when we had the gold standard and all. So it was kind of interesting to see that there'd be such demand for that from retail people who basically aren't following the markets like you and I do. That's a plus. But again, the overriding factor is the continuing purchasing of physical bullion by central banks. And there doesn't seem to be any near-term reason to.
Let's unfold the pages of this global financial thriller, where the protagonists are none other than the BRICS nations, Brazil, Russia, India, China, and South Africa. These nations, often perceived as the challengers to the established Western economic dominance, are not just content with playing second fiddle in the grand orchestra of global finance. No, they are orchestrating their own symphony, a melody that resonates with the aspirations of emerging economies worldwide. Imagine a world where economic allegiances are not dictated by historical ties, but are formed on the anvil of strategic necessity and mutual benefit. This is precisely the world BRICS envisions as it welcomes new powerhouses into its fold. Nations like Saudi Arabia, the United Arab Emirates, Egypt, Iran, and Ethiopia. This expansion isn't just about increasing numbers. It's a calculated move, a chess game of global proportions where each new member adds not just economic heft, but also a piece to the puzzle of a diversified, resilient economic alliance. Now, let's focus on the currency, the lifeblood of global trade. In the current paradigm, the US dollar reigns supreme, a status unchallenged for decades. But imagine the rumblings of change, a subtle yet potent shift in the tectonic plates of global finance as these nations collectively question the unipolar currency dominance. They're not just questioning, they're acting, the strategy to de-dollarize. To shift the gears of trade and investment from the dollar to a mosaic of local currencies, a move that's as bold as it is unprecedented. Consider the implications. Every dollar sidelined in international trade weakens the threads that hold the fabric of the dollar's dominance together. And as these threads loosen, the global economic landscape begins to morph. The petrodollar system, long serving as the backbone of the dollar's supremacy, especially in the all-critical oil markets, finds itself at a crossroads. What happens when the very nations that prop up the petrodollar start seeking alternative paths, new avenues that lead away from dollar dependency? But this narrative isn't just about moving away from something. It's equally about moving towards something, a new financial paradigm. BRICS nations are not merely content with disrupting the status quo. They are actively laying the foundation stones of an alternative economic edifice. Picture this: a world where trade and investment are lubricated by a common currency, conceptualized and controlled not by the West, but by an alliance that represents the emerging heartbeat of the global economy. And at the heart of this emerging economic narrative is a metal, one that's been a symbol of wealth and stability for millennia: silver. But why silver, you might ask? Think beyond its sheen, and you'll find a metal with characteristics that make it a compelling protagonist in this unfolding saga. Its intrinsic value, coupled with its indispensable role in industries, ranging from electronics to renewable energy, positions silver not just as a commodity, but as a cornerstone of industrial and economic stability. As we delve deeper into this narrative, remember, the potential realignment of global economic power is more than a mere hypothesis. It's a scenario that's being written with every trade agreement that sidesteps the dollar, with every ounce of silver extracted and traded, and with every strategic move that BRICS nations make on this grand geopolitical chessboard. So as we stand on the brink of what could be a transformative reshaping of global financial architecture, one question looms large. Are we witnessing the dawn of a new era where the dollar's descent is mirrored by the ascent of silver? Only time will tell, but the signs, the strategies, and the shifts we're witnessing today suggest that this narrative is not just a fanciful tale. It's a real, unfolding saga that could redefine wealth, power, and economic sovereignty in the decades to come.
My friend, there was a report that wasn't well publicized, but you'll find it if you look, and that is that, Xi Jinping and Modi met on the sidelines at the summit and basically said that, look, we will do all we can to resolve our border disputes. Of course, you mentioned Iran and Saudi Arabia and building embassies in each other's countries, and the first railway and road being built between Iran and Iraq. And look, it's not going to be easy, but that's why I believe when you have a system like they are set up, what they're setting up or have set up, it lends itself to cooperation in the respect that the presidency, as an example, rotates each year. You mentioned it goes to Russia, just left South Africa. Each year, the main countries then get to take over the presidency. And I think the way that you resolve that is to not make any one country a dominant central figure. And that's where blockchain and that's where commodities that are pegged to a blockchain come into play, to give everyone equal voice, equal footing, equal say at the table. Mm-hmm. Look, I would simply say this. When you look at the way things are being done, in large part, and the Belt Road Initiative is a good example, they are being done in a mutually cooperative manner where, everyone is winning in the endeavors of increasing the infrastructure, of building bridges and roads and maritime channels and building oil refineries and gold and silver mines and all of the things that help these countries industrialize. It's not going to be easy, certainly not, but I do believe it will be one that will be built on cooperation. And the very fact, yes, they may have suspended flights over a technical issue, but again, this is not something that you can just snap your fingers and say, okay, it's all fixed, but you can see the drive to make it work. And look, if countries don't agree with the US, we just come in and we do things in a more coercive manner. These countries are at least trying to do it diplomatically. I'm not saying that this is going to be something that will be easy. But what I am saying is that for the first time in history, there is a coalition forming. And if done the right way, using transparency, using commodities, using mutual beneficial tactics, where no one country rules the roost, then indeed I think it has a very, very strong probability of working, at least working out their differences enough to allow them to at least try and reach their ultimate goal, and that is of having a group of countries that is not beholden to the West and to the West's ideology.
Right. I mean, one of the counters.
In our journey through the intricate maze of global finance, we've seen the bold strides of BRICS nations reshaping alliances and challenging the status quo. Now, let's turn our gaze to a cornerstone of the current economic order, a linchpin holding together the fabric of global trade and finance, the petrodollar system. This system, a product of geopolitical chess games played in the 1970s, cements the US dollar's position as the de facto currency for global oil trade. But as we've embarked on this narrative, it's become evident that the ground beneath the petrodollar's feet is shifting, subtly yet significantly. Imagine a skyscraper that stood tall and unchallenged for decades, its foundation seemingly unshakable. Now picture hairline cracks beginning to appear, almost imperceptible at first, but growing, spreading, driven by the relentless pressure of changing times and new ambitions. This skyscraper is the petrodollar, and the emerging fissures are the result of a strategic drift away from dollar dependency by nations that once seemed tethered to it irrevocably. The significance of the petrodollar system in maintaining the US dollar's global supremacy cannot be overstated. It's a system that has allowed the US to wield economic influence far beyond its shores, a privilege that comes with being the currency in which the black gold, oil, is traded. But what happens when the black gold finds new suitors? When bilateral trade agreements start bypassing the dollar, opting instead for a tapestry of local currencies? This isn't a hypothetical scenario. It's unfolding before our eyes, as significant portions of global oil trade begin to untether themselves from the dollar. This shift is profound. It's not just about changing currency symbols on transaction ledgers. It's about altering the very dynamics of economic power and influence. Every oil deal that sidesteps the dollar chips away at the edifice of the petrodollar, eroding the influence that the US wields in global financial corridors. And as this influence wanes, the implications ripple far and wide, touching everything from national economic policies to individual investment strategies. But why is this happening? Why are nations, once content to operate within the petrodollar framework, now seeking alternatives? The reasons are as complex as they are compelling. They range from geopolitical realignments and economic self-interest to strategic foresight and a collective aspiration to shape a multipolar economic order, an order where influence is more evenly distributed, where economic sovereignty is not just a privilege enjoyed by a few. And in this evolving narrative, the role of the dollar is being questioned, scrutinized like never before. Concerns about the potential weakening of the petrodollar system are not just conjectures. They're grounded in real, observable shifts in global trade patterns and alliances. These concerns reflect the growing realization that the economic tides are turning, that the unipolar world of finance that we've known for decades is gradually morphing into a multipolar one, with different centers of influence and control. As we navigate through this transformative era, one thing becomes increasingly clear: the stability and dominance of the petrodollar, and by extension, the US dollar, are not as invulnerable as once perceived. The emerging global financial landscape is more akin to a kaleidoscope, constantly shifting, presenting new patterns and possibilities. In this landscape, the petrodollar's future, once seemingly set in stone, now appears to be cast in a more malleable mold, shaped by the strategic choices and economic ambitions of nations that are no longer content to be mere actors in a script written by others. In this grand narrative of economic realignment and challenge to the established order, the petrodollar emerges not just as a symbol of the past, but as a crucible for the future, a future where the traditional anchors of financial stability and power are being reevaluated, re-envisioned, and perhaps even redefined.
Again, and I want to be very thoughtful on this because I don't want to be sensational. And again, this goes to a number of themes. Oil in particular, de-dollarization, or the dollar in general, they're all tied together. You start with respecting these skepticisms. You have to respect the skepticism on oil or de-dollarization. And again, this is why I have so much respect for Brent Johnson, who I think has a great diagnosis of where we've been for many years with the dollar being undeniably strong, because as he said, there's this great big straw throughout the world, in the Eurodollar markets, in the derivative markets, in the oil markets, the petrodollar, this great big sucking sound on this straw for US dollars. That is the world reserve currency. It's not going to be replaced by the ruble or the yuan or the peso anytime soon. And so you have this tremendous natural demand for the dollar. And I think it's a great diagnosis. Where I think it's not as a good prognosis. I'm not saying next week, next month, over the next 5 to 10 years, I think there's strong evidence that that straw has some massive cracks in it. The first and most important crack in the milkshake theory straw, I think, is it underestimates the US Treasury market by focusing too much on the US dollar or the DXY. The demand for the US dollar, look, it's 80% of world trade is settled in dollars, 70% of GDP is in dollars. So the demand for the US dollar is strong. But the demand for the US Treasury is tanking. That's objective, that's empirical. Again, central banks, investors it's clear that there's a distrust of that US Treasury, that US IOU, because there's so much issuance, fiscal and monetary stimulus in combined, that's debased the faith in the U.S. Treasury. It's a declining asset when Powell was raising rates from a creditor, from a debtor, that's massively in debt, 34 trillion in public debt and climbing. So it's a declining asset from a bad credit. That's just the U.S. Treasury market. So when the U.S. Treasury market has less demand, the Fed will have to monetize that demand unnaturally and print money. So that actually affects the dollar negatively. Oversupply of dollar, less demand, massive crack in the milkshake theory straw, in my opinion, over time. But that's happening in real time. We can talk about Powell's pivot in a minute, but you can't deny that that's an objective reality. As to the oil market, the petrodollar since the 70s, since 73, absolutely no coincidence that when Nixon welched on the gold standard, in other words, decoupled the dollar from its chaperone of gold, that they were looking for some serious demand for that dollar when it no longer had a gold chaperone. So Nixon and every other president since could print at will to support policies, to stay elected, to export inflation throughout the world, to be the bully currency of the world, the exorbitant privilege of that. But it wasn't long after we decoupled from the dollar in 71 that Kissinger and Volcker and Nixon were saying around, and anyone else, how do we get demand for this dollar? Let's run off to the OPEC countries. Let's convince them that our dollar should be the purchase mechanism for oil internationally. That was an amazingly important coup to pull off for the US dollar as a world reserve currency. People forget that at that time, it wasn't a foregone conclusion that Saudi Arabia or OPEC would just adopt the US dollar. Because for many years, when the dollar was backed by gold, oil prices were very stable. Once the dollar decoupled from gold, the volatility, I can send a chart on this, the volatility of the oil price was all over the map because it no longer had that golden chaperone. So OPEC nations were legitimately saying, why should we trust your dollar? At the same time that they were questioning that, and Kissinger was trying to strike deals to save the dollar's demand, Volcker was raising rates by 18%. We had positive real rates of 5 to 8% at that time in the early 70s. Because Volcker could raise rates to make the US dollar and the US Treasury look more attractive to OPEC.
As our narrative unfolds, revealing the intricate dance of global economies and the shifting sands of currency dominance, it suddenly casts a spotlight on a player whose role is as pivotal as it is enduring: silver. This precious metal, often overshadowed by the lustrous allure of gold, holds a tale as fascinating as the histories of the civilizations that have cherished it. Silver's saga is not just one of wealth and adornment, but of resilience, stability, and intrinsic value, characteristics that make it a silent sentinel in times of economic tumult. Let's rewind the tape of history to times when the world's economies trembled, when currencies faltered and uncertainties clouded the financial horizons. Amidst these upheavals, silver has demonstrated remarkable stoicism, often holding its ground or even fortifying its position when other assets stumbled. But why does silver exhibit such resilience? The answer lies not just in its tangible value, but in its deep-rooted integration into the fabric of human progress. Silver's worth transcends its monetary value. It is intertwined with technological innovation and industrial advancement. Its conductive properties make it an unsung hero in electronic devices. Its reflective nature lights up solar panels, and its antibacterial qualities stand guard in medical applications. This metal does not just sit in vaults. It pulses through the veins of industries, an indispensable resource that fuels progress and innovation. But let's also address the elephant in the room, the volatility that shadows the world of precious metals. Yes, silver, like its peers, is not immune to market gyrations. There have been times when its sheen dimmed, when prices dipped, echoing the sentiments of broader economic landscapes. Yet, it's crucial to view these fluctuations through a lens that captures the broader picture, a panorama that spans beyond immediate tremors to the steadier ground of long-term value. Consider the evidence etched in history. Instances like the late 1970s or the aftermath of the 2008 financial crisis, when the world's economies teetered, yet silver found a way to not just survive, but to thrive. These weren't mere anomalies. They were testaments to silver's enduring appeal, to its role as a haven in the stormy seas of economic uncertainty. And as we stand at the crossroads of potential shifts in global currency dynamics, silver's historical stability isn't just a fact to be acknowledged. It's a narrative to be delved into, a harbinger of its potential role in the financial chapters yet to be written. As we weave through the complexities of currencies and commodities, silver's performance during past dollar crises deserves more than a cursory glance. It's a narrative punctuated with instances where, despite the prevailing economic downturns, silver didn't just hold its ground. It carved a niche for itself, a niche that underscored its independence from the dollar's fluctuations and its intrinsic value as a standalone asset. And so, as we ponder the future, as we speculate about the implications of a world where the dollar's dominance wanes and new economic orders emerge, silver's tale offers a beacon. It reminds us that stability and value can persist, even flourish amid change. It prompts us to consider the possibility that in the impending reshuffle of global wealth and power, silver could emerge not just as a bystander, but as a key protagonist, its luster undimmed, its worth unequivocally affirmed. In this grand narrative of economic realignment and currency upheavals, silver stands as a testament to endurance and intrinsic value. It beckons us to look beyond the immediate, to recognize its potential as a stabilizing force in a world bracing for transformation. And as we turn the pages of this evolving saga, silver's historical stability isn't just a chapter from the past. It's a precursor to future possibilities, a harbinger of its pivotal role in the tapestry of global finance that's being meticulously woven before our very eyes.
2024 is going to be a very interesting year, Donegan, because I would expect in the next few months the Ukraine situation to have some sort of resolution. And the resolution basically will be that America and her NATO partners will just give up on Ukraine. We're already seeing this beginning to start because there are reports of the head of the Ukraine army, the general in charge, is now talking to his opposite number in Russia with a view to ending this. The political class, in other words, led by Zelensky, is resisting this hugely. NATO allies are resisting it hugely, and they do not want to see peace in the Ukraine, because that, if you like, is the equivalent of Russia winning this conflict. But I'm afraid the politicians are out of the loop now. This is happening between the leaders of the two armies. They're negotiating the peace between them, and the politicians, have basically had it. They're no longer a party to this. So this is going to be settled without the agreement of NATO and without the agreement of Zelensky. Zelensky will probably have to get on an aeroplane and go and find somewhere else to live. Either that, or he'll be strung up by a lamppost somewhere. I mean, that's the sort of situation which we're rapidly coming to. This also, incidentally, has the tacit approval of Putin. And you may or may not have seen that in the last 2 or 3 days, Russian missile activity has accelerated very, very substantially, attacking cities. I mean, as far west as Lviv, close to the Polish border. And all this is about putting pressure on the Ukrainians in particular to come behind their army generals and understand that this is something which they just need to give up. So that's the first thing that's going to happen. I wouldn't be surprised if we see that in the coming few months. I mean, by the end of the first quarter, I think that that story will be gone. President Biden will have the problem that when he came in, his first acts was to abandon Afghanistan, which was a horrendous story. And one of his last acts is going to be the failure of the Ukraine. And then on top of that, of course, we've got the Israeli situation. That I think is extremely concerning, and it's very, very tricky. Everybody's involved in this. At the moment, very few are actually involved in the ground. The Israelis, I've been sort of trying to put myself in the Israelis' position. They will have seen the growing unity amongst the Arab nations. I mean, you've got, relationships have been restored now between Iran and Saudi Arabia. You've got the Gulf Cooperation Council, in other words, all the states, if you like, in the Middle East and in North Africa, all coming into the Russian-Chinese fold. And so you don't have, we've moved from the situation where America basically dominated the Middle East on a basis of divide and rule. As long as you had, Arabs fighting each other the whole time, they didn't fight you, if you see what I mean. So you could actually then control the overall situation. And it is that has been the guarantee that the Israelis have had about their security, really for a very long time, for the last 40, 50 years. This American presence, the fact that the Americans dominated the Middle Eastern efforts. And this, of course, is why there's so much lobbying between Israel and your politicians in Washington. That has come to an end. And if you put yourself in the Israelis' position, you begin to sort of fear that without that power from America in the region, then how long can you exist as a country with all these potential enemies around you? And I suspect that probably was a factor in persuading the Israelis to try and remove Hamas from.
In this intricate mosaic of global finance where currencies and commodities intertwine in a delicate dance of power and value, silver emerges not merely as a passive participant, but as an industrious protagonist, playing a role that's as vital as it is versatile. To comprehend silver's true essence, one must venture beyond its gleaming facade and into the realm of industry and innovation, where it assumes a myriad of roles, silently powering progress and shaping the future. Imagine a world where every flick of a switch, every mile driven in an electric car, and every byte of data transmitted across the globe owes a part of its journey to silver. This isn't a stretch of imagination, but a testament to the metal's industrial prowess. Silver's unparalleled electrical conductivity, thermal stability, and reflective qualities make it an irreplaceable resource across a spectrum of industries. From the photovoltaic cells capturing the sun's energy to the latest electronic devices that define our modern existence, silver is there, an unsung hero in our relentless pursuit of progress. But silver's industrial narrative isn't just about its current applications. It's equally about potential and anticipation. As we stand on the brink of technological revolutions, with sectors like renewable energy, electric mobility, and digital communication poised for exponential growth, silver's role is set to amplify. Each solar panel installed, each electric vehicle rolled out, and each cutting-edge electronic device innovated adds another chapter to silver's industrial saga, weaving it more intrinsically into the fabric of our future. Yet, in this tale of industrial indispensability, there lies a stark juxtaposition: the finite nature of silver against the backdrop of its ever-expanding applications. Unlike the currencies that central banks can conjure into existence, silver's supply is bound by the Earth's generosity, its availability a function of mining capacities and technological prowess. And as demand burgeons, spurred by industrial growth and investment appetite, this finite supply casts a long shadow, a specter of scarcity that looms over the market dynamics. This scarcity isn't just a fleeting concern. It's a fundamental force that drives value. In the world of commodities, the relentless tug-of-war between supply and demand is a potent arbiter of price. And for silver, this interplay is accentuated by its industrial indispensability. Each new application, each technological breakthrough that relies on silver tightens the knot of demand, while the supply, constrained and finite, struggles to keep pace. And so, as we chart the course of silver in the global financial seascape, its industrial indispensability isn't merely a feature. It's a beacon that guides its value, a force that propels its significance. In a world teetering on the brink of monumental shifts, in energy, in technology, and economics, silver stands as a steadfast ally, powering innovation, driving progress, and, through its inherent scarcity, reaffirming its worth. As we weave this narrative, the tale of silver transcends the confines of investment portfolios and market charts. It becomes a saga of human progress, of our relentless quest to innovate, to improve, to advance. Silver in this saga isn't just a metal. It's a testament to human ingenuity and ambition, a silent partner in our journey towards a future that's brighter, cleaner, and infinitely more connected. In this grand narrative of economic realignment and currency upheavals, silver's industrial indispensability isn't just a subplot, it's a central theme, a critical element that underscores its potential as a stabilizing force in a world bracing for transformation. And as we turn the pages of this evolving saga, silver's role in industry isn't just a testament to its current worth. It's a precursor to its future prominence, a harbinger of its pivotal role in the tapestry of global finance that's being meticulously woven before our very eyes.
Well, Elijah, I gotta toot my own horn, and I don't, you know that in my interviews, I don't like to do that. But 2 years ago, when we were ending 2021, I made a major decision for myself and anybody who wanted to listen. I said that we were entering the worst ever economic, social, and political era, which has gotten a lot worse, and we can talk about that in a little bit. So I didn't want to own any general equities that weren't related to natural resources. And instead, I actually suggested to people to own physical gold. I don't sell it. That's your business. I don't have any relationship with you. I don't get any pay by anybody other or anything like that. But I said that physical bullion was a worthy, better choice than equities, which was kind of unusual for people to hear. 2 years later, I want you to know gold is still outperforming the stock market over that period by a couple percent point. Now, everybody sees last year's rally, but they don't realize how much was lost the year before. And remember, when you lose 25% in 1 year, you have to almost go up double to make it back. And so as much as the equity market is near its, like you said, all-time high. And here's the other surprise, and this is singing to the choir, but you're deserving to be sung to in this regard. If we went out now and talked to any 100 licensed financial advisors in any spectrum, in any state, and asked them this simple question: what since the new millennium has performed better, stocks or gold? 98 or 99 and would tell you the stock market, because that's what it seems like. It's going up and up. But the bottom line is gold has outperformed the stock market since the new millennium. And you would never know that based on the coverage it gets and what people speak about and all. And, to me, that's just more reasons to keep focusing now. Of course, if the day ever comes, I don't know if it ever can, because the financial community treats gold like kryptonite. It goes against the principles of financial assets and that, et cetera. But if we ever got to the point where we're going to parties and getting our haircuts and guys are telling us to buy gold, even then guys like you might want to think about, hey, maybe it's time to pull it in. But we're so far away from that, and yet gold has, for almost 25 years, outperformed what everybody.
in this riveting saga of economic realignments and the potential renaissance of silver, the perspectives of seasoned market analysts and financial savants offer invaluable insights, illuminating the path that lies ahead. Among these voices is that of Francis Hunt, a name synonymous with astute market analysis and strategic foresight. His insights, born out of decades of experience and a deep understanding of market dynamics, provide a lens through which we can discern the intricate patterns and potential trajectories of silver in the global financial tapestry. Imagine sitting at a vantage point where the panoramic view encompasses not just the immediate market trends, but the sweeping macroeconomic landscapes that shape them. This is the realm of Francis Hunt, where the analysis goes beyond the superficial ripples to probe the underlying currents that drive market movements. In a discourse replete with wisdom and perspective, Hunt elucidates the nuanced relationship between gold and silver, drawing an evocative analogy of a truck, gold, and a trailer, silver, connected by a bungee cord. This analogy isn't just a poetic depiction. It's a vivid portrayal of the kinetic energy that accumulates in silver, poised for release when gold makes significant moves. But Hunt's discourse delves deeper, exploring the gradual shifts in macro trends, the slow yet inexorable turn of the debt market's tides that began in 2020. These shifts, often imperceptible in the short term, are the harbingers of substantial market movements, the undercurrents that, over time, manifest in powerful waves, reshaping the financial landscapes. It's within these gradual shifts that the potential energy for silver's ascent lies, a potential that requires patience and strategic acumen to harness. Hunt's approach to silver investment is a testament to his understanding of its market dynamics and potential. Preferring physical bullion over ETF or miners at the current juncture, his stance is one of cautious optimism, recognizing the long-term value and stability that silver offers, especially in a landscape fraught with uncertainty and volatility. This preference underscores a fundamental truth about silver, its tangible, intrinsic value, a value that extends beyond the ebb and flow of stock tickers and market sentiment. In the broader conversation surrounding commodities, the discourse often pivots to the energy sector, a domain where the currents of change are both potent and palpable. Here, Hunt's insights offer a beacon, guiding us through the nuances of the market dynamics. His cautious yet informed view on the oil market, juxtaposed against the optimistic outlook for uranium, paints a picture of a sector where each commodity plays its distinct part in the symphony of global economics. This nuanced understanding of the energy sector, with its intricate interplay of supply, demand, and geopolitical underpinnings, provides a backdrop against which the story of silver unfolds, a story that's as much about the metal itself as it is about the global context in which it thrives. As our narrative progresses, the insights offered by experts like Francis Hunt serve as milestones, guiding us through the labyrinth of market dynamics and economic indicators. They remind us that the journey of silver, from its industrial indispensability to its potential ascendancy in the financial hierarchy, isn't a solitary one. It's a journey intricately woven into the fabric of global markets, influenced by macroeconomic trends, geopolitical shifts, and strategic foresight. In this grand narrative of economic realignment and currency upheavals, the analytical insights and foresight of market experts aren't just peripheral comments. They're central to our understanding of the potential paths silver could tread. And as we turn the pages of this evolving saga, these insights don't just elucidate the present. They illuminate the future, offering glimpses into the potential that silver holds, a potential that's as profound as it is promising in the ever-shifting tapestry of global finance that's being meticulously woven before our very eyes.
It boils down to the deficit. It boils down to federal spending. Anytime the government runs a deficit, that money gets spent, and of course that's tabulated into GDP. So, and I mean, you could take, if you took deficits out of even the last 20 years, there are many years that the economy would have statistically been negative when they printed positive growth. They printed positive growth. I mean, if you throw an extra trillion or 2 trillion on the government side into the economy and that gets spent, you know, that is, it's activity, whether it's making bombs or whatever it is considered activity. So you've got the government running, what, $1.5 trillion, $2 trillion deficit. It does get into GDP, while the private economy that you and I and most normal people feel is in fact declining and collapsing. I mean, you've got many sectors in the private economy that are not only negative, but in depression. I mean, look, just for example, look at commercial real estate. That has turned into an outright disaster. I just read an article yesterday or the day before where a building that was sold for, I think it was $600 million back in 2014. And if I'm not mistaken, this might be BlackRock's or Blackstone's, one of their buildings. They bought it for $600 million. They stopped making a payment in 2022. And I think there's $300 million in debt left on it. And that debt is being offered for sale at $150 million. So you're talking about a $600 million building that is walked away from, and the lenders are going to eat 50% of the $300 million. So you're looking at a $600 million property now valued at $150 million. I mean, that's not decline or recession. That's
in the grand narrative of global economics, where currencies and commodities perform a complex ballet, dictated by the subtle nuances of market sentiment and macroeconomic forces, silver takes center stage. It's a protagonist whose tale is woven from the threads of industrial indispensability, historical stability, and investment appeal. But to truly grasp the essence of silver's role in the present and its potential trajectory into the future, one must delve into the intricacies of its current market dynamics, a landscape shaped by technical analyses, supply-demand interplays, and the strategic foresights of market pundits. Picture the silver market as a vibrant ecosystem, alive with the buzz of traders, investors, and analysts, each playing their part in the grand scheme of commerce and investment. At its core are the technical setups, the charts and graphs that tell tales of resistance and support, of Fibonacci retracement levels and moving averages. These aren't just lines on a screen or figures in a report. They are the pulse of the market, the heartbeat that signals its vitality and direction. Recent analyses paint a picture of silver at crossroads, oscillating within a narrow trading band, yet brimming with potential energy, much like a coiled spring awaiting release. The metals dance around key Fibonacci levels, and its stallions, with the 100-day simple moving average, SMA, are more than mere technical movements. They are subtle indicators of a market ripe with possibilities, a prelude to what could be a significant upward trajectory. But what fuels this potential ascent? The answer lies in the confluence of technical indicators and fundamental forces. On one side, the technical setup favors bullish trades, with the metals struggle to breach resistance levels seen not as a sign of weakness, but as the gathering of momentum. On the other side, the fundamental forces of supply and demand play their timeless tune, a melody that resonates with the rhythm of industrial demand and investment appetite. As we navigate through this landscape, it's crucial to acknowledge the factors that sway the market sentiment. The limited yet ever-in-demand supply of silver, a reality etched into the very fabric of its market dynamics, sets a stage where scarcity plays a leading role. And as industries and technologies continue to rely on silver's unique properties, this demand is not just sustained, it's amplified. Inflation, the specter that haunts economies and erodes the value of currencies, casts its shadow over commodities as well. Yet, in this shadow, silver finds not just refuge, but a potential avenue for growth. As inflationary pressures mount, the allure of tangible assets like silver grows stronger, a testament to its enduring value and appeal as a hedge against economic uncertainties. And let's not overlook the impact of governmental policies, the subtle yet significant influence that shapes the market's contours. In a world where the supply of silver is intricately tied to the policies of nations that control its veins, every policy shift, every regulatory change, is a ripple that travels through the market, shaping its currents and tides. As we chart the course of silver in this intricate dance of market dynamics, we're reminded that its story isn't just one of value and investment. It's a narrative that's deeply entrenched in the global economic fabric. It's a tale of potential and anticipation, of resilience and intrinsic worth. In the grand scheme of global finance, silver's current market dynamics aren't just a snapshot in time. They're a prologue to a future where its role and relevance might just redefine the paradigms of wealth, investment, and industrial innovation. In this unfolding saga of economic realignment and currency upheavals, the current market dynamics of silver form a crucial chapter, one that sets the stage for its potential ascendancy. And as we turn the pages of this evolving narrative, the interplay of technical analysis, fundamental forces, and strategic foresights doesn't just shape the present. It casts a light on the future, revealing the myriad possibilities that lie in wait for silver, a metal whose story is as lustrous as its sheen, in the ever-evolving tapestry of global finance that's being meticulously woven before our very eyes.
Look like.
Look, these BRICS nations wouldn't even have to do something that provocative, although I think they may. They could say one of two things. They could say we're taking other currencies besides dollars, and just that admission alone.
But they've said that. They've practically said that.
They said we're open to it, but they haven't said we're going to. We'll take these 5 or 6 currencies. Or maybe it's more along the lines of they just say to all of the BRICS members, which represent the majority of human population, is that we're going to trade in local currencies, or we're going to trade in gold, or whatever it may be. If the desire or the need to hold US dollars is waning to that degree, or in fact is completely disincentivized, yeah, it creates a massive, massive problem for the US. And I think, look, a country that has chosen inflation over austerity the way that we have, a country that is, when you factor in unfunded liabilities, 150 trillion in the hole with 5 trillion in assets, a country that is in essence insolvent, that goes around the word bullying.
In this grand theater of global economics, where currencies and commodities play out their roles against the backdrop of geopolitical strategies and market dynamics, the US dollar has long held the spotlight. Its stature as the world's reserve currency, a bastion of stability and trust, is a narrative deeply ingrained in the annals of modern finance. But as we peel back the layers of this narrative, we uncover a plotline rife with complexities, challenges, and a hint of vulnerability. A plotline that sets the stage for potential shifts of seismic proportions. The US dollar, much like a sovereign reigning over a vast empire, derives its strength from the collective belief in its value and the economic might of the nation it represents. But beneath this veneer of invincibility lie undercurrents of concern, whispers of what-ifs that question the permanence of its dominion. The specter that looms largest in this tale is the burgeoning national debt, a behemoth that casts a long shadow over the dollar's realm. As the debt surges past staggering milestones, it beckons questions about sustainability, stability, and the future of the dollar's supremacy. Yet, the story of the dollar's potential decline isn't merely a tale of numbers and debts. It's a narrative shaped by the global quest for diversification and economic sovereignty. In a world where reliance on a single currency is akin to placing all one's eggs in one basket, nations and investors alike are exploring alternatives, seeking hedges against the vulnerabilities of dependency. It's within this context that silver, with its historical stability and industrial indispensability, emerges as a protagonist, not just as a commodity, but as a potential cornerstone in a reshaped financial order. The allure of silver, in contrast to the dollar, lies not just in its tangible value, but in its inherent characteristics, its finite supply, its versatility in industrial applications, and its resilience amidst economic upheavals. As the dollar navigates the choppy waters of high national debt and the pressures of maintaining its global stature, silver stands firm, its luster undimmed by inflationary pressures or market volatilities. But the narrative of the dollar's dilemma is not one of immediate collapse. It's a tale of gradual shifts, of subtle realignments in the undercurrents of global finance. It's a story that unfolds with each bilateral trade agreement that sidesteps the dollar, with each strategic move by nations and economic blocs to de-dollarize their trade and reserves. These aren't just ripples in the financial pond. They're harbingers of a potential shift in the tectonic plates of global economic power. In this unfolding drama, the role of the dollar is being scrutinized, reassessed in the light of emerging challenges and shifting paradigms. The questions it raises aren't just about the dollar's future, but about the shape of the new world order that might emerge in its wake. How will the balance of economic power shift if the dollar's dominance wanes? What role will commodities like silver play in this redefined landscape? And how will nations and investors navigate the new map of global finance that's being drawn? As we ponder these questions, the tale of the dollar's dilemma and silver's potential ascendancy isn't just a narrative of currencies and commodities. It's a saga of human endeavor, of our collective quest for stability, prosperity, and a balanced distribution of power in the intricate web of global economics. And as this saga unfolds, the interplay between the dollar's strengths, its inherent vulnerabilities, and the looming possibilities of its decline casts a compelling light on the future. a future where the luster of silver might just illuminate new paths in the ever-evolving journey of global finance?
That's a great question. Yeah, the good news is that because rates are going to be coming down and their bond values are going to be going up, it won't be their balance sheet from the standpoint of their bond holdings. It'll be more their loan portfolios that'll be in trouble. There'll still be banks in trouble because they, got aggressive in lending to areas that are going to be hit. Junk bonds are going to be hit pretty hard. Corporates, if they have corporates on their balance sheet, they'll be hit. So it's the one area that everybody's worried about, or has saw the punishment last March particularly, was the government guaranteed bonds, was the portfolio of treasuries that most banks have. Ironically, that's not where the problem is going to be when the bust hits. It's really their lending portfolios, and it's classic. You go back to 2008-9, go back to the early 2000s in recession, go back to 1974, early 1980s. Whenever a recession hits, and this will be a hard one, this will be a deep one, the banks take a hit because of their loan portfolios, and it includes mortgages. Housing's going to be a problem, so there'll be, particularly those that have bought houses in the last few years at these elevated prices. I think a lot of those are going to be, underwater, and if they lose their job, have trouble, maintaining their loan. So that's where you get into trouble, is when you have an economic cycle that turns south. The banks, obviously, their portfolios suffer. So the degree to which it happens, it all depends on the bank, and it depends, obviously, on the cycle. But because I think this is going to be a very hard landing, they're certainly going to have problems there. As I say, there'll be a lot of involuntary debt liquidation, I think, this cycle.
In the grand tapestry of global economics, where threads of currencies, commodities, and geopolitical strategies weave intricate patterns, the potential ascendancy of silver emerges as a compelling narrative, rich with the promise of transformation and redefinition. As we stand at the crossroads of economic realignments, the role of silver extends beyond its traditional confines, hinting at a future where its luster illuminates new paths in the world of finance. Envision a world where the dominance of traditional currencies is gently eroded, not by volatility or collapse, but by a collective gravitation towards a more diversified, multipolar financial order. In this new world, silver's role is not just as a passive store of value, but as an active, dynamic participant in shaping the foundations of economic stability and growth. Its ascendancy from a mere commodity to a pivotal element in this emerging order is a journey marked by its intrinsic attributes, its historical stability, industrial indispensability, and finite supply. The potential of silver in this reshaped financial landscape is multifaceted. Its value is not pegged to the policies of a single nation or the whims of monetary authorities. Instead, it is underpinned by its tangible worth and the relentless demand from a multitude of industries. This positions silver uniquely as a stabilizing force, a counterbalance to the fluctuations and uncertainties that characterize the realms of fiat currencies. But the ascent of silver in this evolving narrative is not just about economic stability. It's also about the strategic empowerment of nations and investors alike. The diversification of reserves and assets, once heavily skewed towards traditional currencies, now finds a compelling alternative in silver. This metal, with its dual appeal as an industrial powerhouse and investment haven, offers a bridge, a way to navigate the transition from the old economic paradigms to the new, with resilience and confidence. And as we ponder the potential of silver in this emerging financial order, we must also consider the transformative impact it could have on global trade and investment. A world where silver assumes a central role is a world that values tangibility and intrinsic worth, a world that recognizes the limitations of finite resources and the potential of commodities that stand the test of time and economic upheavals. In this grand narrative, the ascendancy of silver is not merely a shift in investment trends. It's a redefinition of the very concept of value and wealth. It's about envisioning a future where economic sovereignty is not tethered to a single currency, but distributed across a spectrum of tangible assets, with silver shining prominently among them. It's about recognizing the potential of this metal to not just reflect the light of economic stability, but to be a beacon, guiding the way towards a balanced, diversified, and resilient financial future. As this saga of economic realignment and currency upheavals unfolds, the potential ascendancy of silver isn't just a chapter in the annals of commodities. It's a pivotal plotline in the story of global finance. And as we turn the pages of this evolving narrative, the transformative implications of silver's rise aren't just a testament to its enduring value. They herald the dawn of a new era, an era where the sheen of silver casts a luminous glow on the path of economic progress and stability, in the ever-evolving journey of global finance that's being meticulously woven before our very eyes. In the grand mosaic of global economics, where each nation plays its part in the intricate ballet of power and influence, the reshuffling of alliances, and the strategic reorientation of economic policies are not mere background movements. They are potent forces that shape the destiny of currencies and commodities alike. In this evolving narrative, the potential decline of the US dollar's dominance and the concurrent rise of silver are not isolated chapters. They are intertwined plotlines in a saga of transformation that transcends borders and reshapes the very contours of global power dynamics. Picture a world in which the traditional anchors of economic stability and dominance are gently unmoored, not through conflict or collapse, but through a deliberate, strategic realignment of nations seeking to diversify their economic partnerships and reduce dependency on a unipolar currency system. The BRICS nations, once the challengers at the periphery of global economic discourse, now find themselves at the heart of this transformation, steering the ship towards uncharted waters with a newfound confidence and collective resolve. The expansion of BRICS, welcoming new members with open arms, is not just an enlargement of a group. It's a bold statement, a declaration of intent to sculpt a new world order where economic influence is more evenly distributed, where reliance on the US dollar is not a necessity but a choice. This strategic expansion, with nations like Saudi Arabia and the United Arab Emirates adding their weight to the scale, tilts the balance of power, inching the world closer to a multipolar economic reality. In this reshuffled landscape, the role of traditional currencies, especially the US dollar, faces unprecedented scrutiny. The emergence of bilateral trade agreements that bypass the dollar, the exploration of local currencies for international trade, and the contemplation of a common currency for trade and investment within the BRICS bloc are not just ripples in the financial pond. They are waves that erode the bedrock of the dollar's supremacy. But as the influence of the dollar wanes, a void emerges, a space that beckons a new protagonist to step forward. Silver, with its millennia-old legacy of value and trust, its indispensable role in industries of the future, and its finite supply, emerges as a compelling candidate. The ascendancy of silver in this new economic paradigm is more than a resurgence. It's a renaissance, a recognition of its intrinsic worth and potential as a stabilizing force in a world bracing for change. The implications of this global reshuffle extend beyond currency markets and trade balances. They touch the very essence of national sovereignty and economic independence. A world where economic alliances are realigned, where trade mechanisms are redefined, and where currencies like the dollar share the stage with commodities like silver is a world that values diversity and resilience. It's a world that acknowledges the limitations of over-reliance on a single currency and recognizes the potential of tangible assets to anchor economic stability and growth. In this grand narrative of economic realignment and currency upheavals, the global reshuffle of alliances and strategies isn't just a subplot. It's a central theme that sets the stage for the ascendancy of silver. And as we turn the pages of this evolving saga, the geopolitical and economic implications of these shifts aren't just a testament to the changing times. They herald the emergence of a new economic order, an order where the luster of silver illuminates the path towards a balanced, diversified, and resilient financial future. In the ever-evolving journey of global finance that's being meticulously woven before our very eyes, as we navigate through the swirling currents of global economics, where the forces of change reshape the landscape with each passing moment, it's time to pause and reflect. This journey we're on isn't just a solitary expedition. It's a collective voyage, one where your insights, questions, and perspectives add depth and color to the narrative. As we stand at this crossroads of economic transformation, let's engage in a dialogue, a meeting of minds that delves into the possibilities and challenges that lie ahead. Imagine a world where the gleam of silver isn't just a reflection of light, but a beacon of change, signaling a shift in the global financial order. What would this shift mean for our economies, our investments, and the very fabric of our global financial systems? How will the ascendance of silver reshape your understanding of value, stability, and economic resilience? These aren't just rhetorical questions. They are invitations to explore, to ponder, and to engage with a narrative that's as much yours as it is the world's. As we ponder the potential rise of silver in this new economic paradigm, let's not forget the power of conversation and community. Whether you're a seasoned investor, an avid market watcher, or simply someone fascinated by the intricate dance of global economics, your voice matters. What are your thoughts on the potential decline of the dollar's dominance and the concurrent rise of silver? How do you envision the future of global trade and investment in a world where traditional economic paradigms are being questioned and reshaped? But as we engage in this dialogue, let's also remember the value of staying connected, of being part of a community that's not just a passive observer, but an active participant in the unfolding economic saga. If you haven't already, subscribe and join us on this journey of discovery and insight. Your engagement doesn't just enrich the conversation, it propels the narrative forward, adding new dimensions and perspectives to our collective understanding of the world of finance. And as we continue to unravel the complexities of this evolving story, remember that this narrative is not just about observing and analyzing, it's about being part of a community that's at the forefront of understanding and navigating the shifts in global economics. Your subscription is more than just a click. It's a step into a world of informed exploration, a world where every development, every insight, and every perspective is a piece of the larger puzzle we're piecing together. In this grand narrative of economic realignment and currency upheavals, your engagement and your voice aren't just welcome, they're invaluable. So as we turn the pages of this evolving saga, let's not just be spectators, let's be participants, engaging with the narrative, sharing our insights, and shaping the discourse. Together, let's continue to explore the fascinating world of global finance, illuminated by the luster of silver and the myriad possibilities it holds, in the ever-evolving journey that's being meticulously woven before our very eyes. In this enthralling odyssey through the labyrinth of global finance, where each twist and turn has revealed deeper layers of complexity and insight, we now stand at the apex, the point where multiple strands converge to paint a picture of a potential future. A future where the traditional bastions of economic power are challenged, and new protagonists emerge to claim their place in the spotlight. Among these protagonists, silver shines prominently, not just as a passive spectator, but as a potent force, poised to redefine the paradigms of wealth, value, and global economic order. As we journey through the narrative, we've witnessed the strategic maneuvers of the BRICS nations, their concerted efforts to de-dollarize trade, and their ambitious vision to sculpt a new financial architecture. This isn't just a reshuffling of alliances. It's a profound transformation, a deliberate and strategic move towards a more diversified, balanced, and resilient economic order. In this emerging order, the reliance on a single currency is not just questioned, but actively challenged, paving the way for alternatives to rise and claim their space in the global financial tapestry. Silver, with its millennia-old legacy of value, its unmatched industrial indispensability, and its finite nature, stands at the forefront of this transformation. Its ascendancy is propelled not just by market speculation or investment trends, but by a confluence of strategic, economic, and geopolitical forces that collectively signal a shift in the global economic zeitgeist. The potential elevation of silver to a price of $4,044 isn't just a number. It's a symbol, a representation of the metal's intrinsic worth and its burgeoning role in a world bracing for change. But as we cast our gaze into this potential future, it's crucial to navigate the landscape with a sense of balance and perspective. The journey of silver from its current status to the lofty heights it might achieve is laden with uncertainties and contingencies. Market dynamics are notoriously fickle, influenced by a myriad of factors that range from industrial demand and supply constraints to geopolitical developments and macroeconomic trends. As we stand at this juncture, it's essential to recognize that the potential ascent of silver to unprecedented heights is not a foregone conclusion but a possibility, one that's grounded in sound logic and a careful analysis of prevailing trends and strategic maneuvers. The narrative we've explored is not a prophecy. It's a well-informed speculation, a vision of what could be, based on the intricate interplay of forces that shape the global economic landscape. In this grand narrative of economic realignment and currency upheavals, the potential rise of silver is a testament to the metal's enduring appeal and its emerging role in the new financial order. And as we conclude this exploration, let's not forget that while we journeyed far and delved deep, the story of silver, and indeed of global finance, is an ongoing saga, one that continues to evolve with each passing moment. As you, our viewers, continue to navigate the complexities of the market and the intricacies of investment strategies, remember that knowledge is your most potent ally. Stay informed, stay engaged, and let's continue to explore this fascinating world together. And as always, a gentle reminder: while we strive to provide insightful analysis and informed perspectives, our discussions are not financial advice. Your financial journey is unique, and we encourage you to seek personalized advice from qualified professionals. In the ever-evolving narrative of global finance, the potential ascent of silver is not just a chapter. It's a harbinger of transformation, a beacon that illuminates the path toward a future where balance, diversity, and resilience are not just ideals but the cornerstones of a new economic order.